positive sentiment returning for COSM stock with ads like this from Microcap Daily. I'll make sure to leave the link in the description below for you guys to read for yourselves. But what does this mean for price action for COSM? Well, let's just go ahead and find out in this video here. What is up, you guys? Thank you so much for coming back once again. This is ARCa coming at you with a COSM price update. Let's go ahead and do technicals. We'll do some candle analysis and all that good stuff, okay? Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCa, in Discord. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at Cosmos in the daily chart here, and we were actually looking at this yesterday, and we noticed that we did get a bounce from our gap, which was previously used on, or made, sorry, on, let's see, August 19th. So September 19th, sorry. So now we were expecting a potential drop for us to be able to clear this gap and test our newly converted resistance into support from our larger scale descending broadening wedge, which is already in play. We haven't since touched that. Now, I have a feeling that it may have to do with a few things. There was also a form that was circling around. I don't really remember, guys. I don't really do fundamental stuff, but in this case, it is a little important because it is triggering FOMO and all kinds of things. Okay, so form S3A, which I believe was a form that people were speculating to be for dilution. So now I believe word is actually spreading around that form has been invalidated now, and there is actually not going to be any dilution for COSM. So I actually don't research those things, so actually don't take my word for it, but this is what I've heard. Excuse me. So I think that it'd be good for you guys to inform me or let me know if the members of the Discord are here watching. Please go ahead and share your thoughts on that in the strategy plays, or wherever in Discord. Okay, so yeah, so let's go ahead and just come back into price action. I want to be informed about this SMA. Somebody mentioned that we were okay. So yeah, somebody actually told me that we're using the 10-day simple moving average as a form of support. Sorry, and yes, we are in fact using that 10-day simple moving average very much so. Okay, so this doesn't confirm us. This doesn't confirm an upside move. It's just showing us that the trajectory that we've been following according to the price action versus the SMA 10 is still in play, and we are yet to close a candle below the SMA 10, which is still very bullish for this asset. Okay, so let's go ahead and move on to the next chart and see what we have. So in this chart particularly, there is something that I did want to warn people about that also adds a psychological component. Okay, now the fact that we're getting news like the Microcap Daily and also the Form S3A thing, there's a lot. And then also, I think there was another $1.3 million purchase of shares at 62 cents today from the CEO. So aside from all of those things, all of those positive catalysts in price action, there is a bit of a warning here. First of all, I tell you guys all the time that when we print a hammer candle at the top of a trend, it usually means a trend reversal or maybe a pullback. It doesn't actually have to be a full-on reversal, but in this case I did notice something that can add that psychological component. So it's actually this. So we have a shoulder here. We have yeah, so let me go ahead and do this. And what's going on, man? There you go. And we have the second shoulder coming up here, and then we have the head. So this is essentially brewing head and shoulders formation. So again, I remember, guys, I don't really I'm only calling this out because there's so much of a psychological component added to the entire trading of COSM currently. So if this is something that people are going to be scared of, we have to be able to review the price action for this in the event to where it does happen. So we have to prepare for a downside while we're all bullish, okay? So just to make sure that we don't get trapped by these guys, okay? They're going to play games at us, and then psychological games, okay? And then we're going to just get caught bag holding, and we don't want to do that. Okay, so there is a price objective for this formation, and since the formation is following a sense of an upward trend, there is an implied projective target that can start from around this area upon the completion of this potential shoulder here. Okay, so if we were to break out from this area here, okay, we can actually take a trend line from the top of the formation to what could be the neckline of right at the shoulder, right at the right shoulder, which could be right about here. Okay, so we take that trend line and we apply it to that implied breakout area, which could be here after an arch is complete for that shoulder, and we can see that we can drop all the way to about 19 cents, which actually is confluent with a small gap. I forgot in what time frame, but there is a gap between 18 and 19 cents right down here, which is curious as to also why the 1.618 would be located at 20 cents. So there is some confluence here. And now if we pull up our moving averages, let's just verify that there isn't anything there. Okay, so there isn't a guarantee that in the event to where this does realize, there isn't a guarantee that we would actually touch all the way to the bottom. First of all, we do have the NOT 236 and the 200-day simple moving average here alongside the 100-day simple moving average as a form of support. So by that time, we can actually have both of these moving averages right over here. So the likelihood of us finding a bounce from this area would be great. Okay, so I know that this is beyond the 28 cent, 27 cent level that I've been talking about, but current price action is starting to make this psychologically driven formation. Okay, so there is no mathematics to this formation. It's all psychological, and it's also we can give it some weight since it's on the 4-hour. I would rather see this in the 8-hour to actually pan out. So the smaller the time frame, the less likely these formations tend to pan out. Similarly to how we were looking at our pennant and it got invalidated on the hourly. But it's because the hourly, it's a small time frame. It's not always going to happen. Okay, so let's move on to the next chart here. So we are looking at this. I actually, this is we're not going to last long in this chart here. But since we are talking about the 19 cent level, which could be 1954 to be exact, we can actually see right down here that if people are looking at this as a descending channel, which is what we were looking at it initially before we caught our larger scale descending broadening wedge, the support line for that channel is actually, where do you know? Check it out. 19 and 1972. So there are confluent targets happening here. It doesn't mean that we're going down there. I'm just giving us the warning in case we do. Okay, so we need to be able to protect ourselves in the event to where this does happen. Okay, so if your position is say somewhere around 53 cents, right? And you we start coming down, the price action is going against your favor of direction, right? So in this case, take something like this into consideration. Okay, first of all, I'm not a financial advisor. I can't suggest for you to buy or sell any assets. Okay, take whatever I do show and iterate within these videos as a form of entertainment, and do your own DD, and we'll be okay. Okay, all right, you guys. So now you can actually, depending on your tolerance, okay, everyone's different. So if you're at 53 and you're looking at, okay, I'm not willing to lose any more than, say, 30% of your position, right? So you put this 30% and you then measure from the current price, and you see that you're about 37.34. The price is actually right over here. So 37.34 could be an area to where you release, say, for example, 25% or 10% or 30% or 40% of your position, and not entirely, right? It's because what if we moon, right? So you want to be able to recover what you're losing by stopping a partial stop here and let it fall. Look for the areas that are finding strength, right? And then you apply that whatever percentage you let go at that stop loss down here. Then your 53 cent then your 53-cent average would drop significantly to a lower average, thus making it easier for you to actually catch or be in the money from wherever that lower average is that you got in. Okay, so if you're understanding this is good. Okay, so this is just a way for you to be able to get yourself out of tedious situations. Okay, so this is a good way. So just as clever as in the Discord, people see that I have several entries, I have several stops, I have several exits, take profit zones. Just as creative as you are getting into your position, meaning that you get in 53 and then you want to make sure that you catch another entry at 45 and then you go down to 31. Great. Just as creative as you're being entering into the trade, be as creative with your stop losses as well, so that you can be able to gain better entries when price action is going against you. Don't diamond hand. It's not good for us to diamond hand these types of high risk assets. It's better for you to just make the gains and get out. Okay, so in this case, there is a chance for a huge MOAS here, and we're all holding strong. That's all good. But if you have the ability or the time to be able to just get creative with your stops and entries, then there's no reason for you to just diamond hand. You can actually benefit on the swings of the trade as it's going up and down before we continue on to the upside. Okay, so I just wanted to be able to share that with you guys real fast. So now let's go ahead and move on to the last part of the chart, which is the RSI. So yesterday, and I actually added one more that I didn't catch on the prior day, my apologies. So this is actually another drive of phantom bullish divergence. So divergences actually happen when there is opposition from the price action versus the RSI or a MACD, but in this case we're using an RSI. Okay, so the bullish divergence in this case is actually a regular drive of bullish divergence, to where you can see the price action making lower lows versus the RSI signal making higher lows. Okay, so here you can see we have a low here, and then we have a lower low down here, and also in the RSI we have a low here, and then we have a higher low down to here. Now we have three drives of what's called phantom regular bullish divergence. Now, what makes it phantom? It's the fact that we're not catching it from this area to this area. So we're going through price action from prior days in order for us to reach this form here. So professionals see this. Okay, these are things that not a lot of people know of. So make sure to study your divergences within the RSI. This isn't one solution for all. It doesn't mean that we're going to reach the moon just because you caught divergent drives of bullish divergence. So what it in fact means is that you have now yet another puzzle piece that you can add to your validations for an upside continuation. So this is one piece of the puzzle. Okay, we have another piece of the puzzle here, and then you just continue down the line. So also the fact that you have the moon and stars all aligned doesn't mean that we're going up. Make sure to check your catalysts too. Okay, so in this case, we do have these three phantom drives of regular bullish divergence in play, and thus far it's looking pretty good. These were the two drives that we caught of actually hidden bearish divergence, and you can see those divergent drives right over here. Okay, so now the 12-hour RSI is suggesting a slight downside, but this could be very corrective, and I'll explain after I show the new viewers our RSI profile. Right, let's get rid of this and bring up the RSI diagram. Okay, so new viewers, this is my RSI these are the RSI properties per my RSI setup here. So we have 1, 2, 3, 4 zones which are located right here for you to tag along and see exactly what's going on. Okay, so we are looking at currently this is the RSI signal, purple, and the moving average is the pink. Okay, so the RSI signal line is in the deep areas of the bull weakness percentile, which typically means that we can actually face a correction and be gravitated right into the next zone to the upside. Okay, so now let's open up a multi-pane so we can get an accurate read for more time frames. In this case, we are going to look at actually, you know what, let's start with the 30-minute. We'll go immediate short term. So the short term time frame is suggesting a continuation on to the upside, but please know, once again, we are in the very shallow areas of the the bull weakness percentile, which again means that we are likely to be rejected right into bear weakness. So if we don't dip further into bear weakness, or we don't go higher into weakness, bull weakness. Wow. Then the likelihood of finding some sideways trading in the immediate short term is very likely. Okay, so buy hourly is suggesting a continuation onto the downside, but please remember again, we're in the shallow areas of the bear weakness percentile, meaning that we're likely to be gravitated right back up into the bull weakness percentile. Okay, so and then also the fact that it's a very weak pivot to the downside means that there could be some sideways trading here. Here's another weak pivot. This is a 6-hour RSI suggesting a slight downside, which I wouldn't give too much credit to things when they're. The moving average is giving us a hint as a further continuation to the downside, but it's not strong. So these could be just a bit of a period of sideways trading before finding some type of confirmation of support and moving on to the upside. The daily RSI is suggesting upside, but again, it's in the shallow areas of the bull strength percentile here. So we're likely to be gravitated right back into bull weakness. Okay, so here we're not getting too much of a bias in forward direction here. So we have to be very careful with how we move on the next days. Another thing here is that if for the new viewers, this is volatility you're looking at, represented by this indicator BBWP. Volatility is direction neutral, so we pair it with an indicator similar to this one here. This is actually proprietary to TradingView software, which happens to have about a 75 to 90% hit rate in the backtests that I've performed in several tickers. So in this case, the daily chart stochastic momentum is suggesting a continuation to the downside, and we are at critical volatility load up right here. So, and what I consider to be critical is actually any time that we dive into the beyond this trend line here, which is the 90%. So anytime that we're in the 90% or within the 90 percentile, we can actually see a potential strong move coming. And what I am fearing is that this has not corrected. So if we're playing by the book and no FOMO or no MOAS or nothing is in the picture, this is suggesting a continuation onto the downside per a volatility buildup, suggesting a continuation to test this level here. So I would see an averaging down place anywhere between 18 cents to about 28 cents or 27 cents. So that could be an area for accumulation if we were playing right by the books. But remember, this article that came out from Microcap Daily actually came out after market close. So none of that has been priced in just yet. So there is the likelihood to where the price action may reflect on that early and thus invalidating our downside thesis. But so far, this is just a corrective move. I'm still looking for more upside in the COSM asset. Please remember that we're talking about a head and shoulders. Remember all of the signs that we're looking at, okay? Also the print of the 4-hour hammer candle here, or what could be an evening star, suggest a continuation to the downside or a pullback of sorts. Okay, so please watch out for this. The indicators are not giving us the clear shot to the upside or downside right now. Okay, so be very careful as to where we average in. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me within Discord or Twitter. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community. But with that said, I wish you well, a great weekend, and I will catch you at the bell on Monday. Adios.